Today, we're going to be looking at, real estate insights, trends, and projections for 2026. Our speaker is Mr. Babatunde Akinpelu, the founder of the Nigeria housing market. And we're going to look at what the market is, what the market looks like in 2026 and beyond. Participants will gain clarity on where capital is flowing within the sector, which segments are gaining momentum, and which strategies and developers should prioritize this year. Right, so it sets the tone for informed decision making in an uncertain economic climate. So this event is put together by Bestate Investments, and it's a real estate brokerage in Lagos that helps clients buy, sell, and rent properties through, and they emphasize doing proper due diligence, verification, and advisory support. We also have our headline sponsor, Blueprint Development, which is a real estate development company that is focused on delivering accessible and investment-ready housing solutions. They currently have a flagship project called Morrow Residential, which is a land development in Ibadan that offers investors flexible payment plans, a prime location. So the host, that's me. I'm the managing director of Bestate Investments, also the co-founder of Blueprint Development. My name is Awele Emmanuel Onwuegbuzie. Let's go into today's session, revealing the profile of our speaker. So Mr. Babatunde Akinpelu is the founder and lead housing analyst at Nigerian housing market, a real estate media and data platform advancing transparency, access, and informed decision-making across Nigeria's property system. NHM delivers research, market intelligence, policy analysis, and practical tools for buyers, investors, developers, and diaspora audiences engaging with one of Africa's fastest evolving real estate markets. A dual market real estate investor and analyst with active portfolio in Canada and Nigeria. Babatunde brings a cross-border perspective that applies global standards of data rigor, governance, and risk assessments to local market realities. His work focuses on macroeconomic trends, housing policy, and reducing investment risk through data-driven analysis. Driven by his own journey as an investor, Babatunde founded Nigerian housing market to serve as a trusted source for truth for individuals and institutions seeking clarity in Nigeria's housing markets. Through grounded market insight and actionable intelligence, he empowers stakeholders to make confident decisions while supporting more inclusive and sustainable housing development across the country. So this is a man of excellence, so the man of wisdom, knowledge, and understanding, a man of expertise and professionalism. So please, let's give him a round of applause. Let's give him a round of applause. Let's give him a virtual ovation as he takes the stage to kickstart today's session. Over to you, Mr. Babatunde.
Wow. First of all, can everyone hear me okay? Hello, everybody. If you can hear me, please let me know. Awele, can you hear me okay?
Yes, I can hear you.
Amazing. Awesome. Thank you all so much for having me here today. I really thank you so much for the invite. It is always a pleasure any chance I get to talk about real estate, connect with like-minded people, share some trends, analysis, and just have open conversation about real estate and kind of the direction that we're going in 2026. I definitely don't need to do another introduction after that. After the one you just did. So I will skip that. So thank you for an amazing introduction. I do have a little bit of a presentation for everyone on the call today where I will go through what we think is going to happen in 2026, and hopefully you all live here with information that's going to be meaningful as you navigate the market in 2026. We think that the market is going to be very conservative in 2026, and the realtors, the people that's going to win in 2026, are going to be the people that can use data, storytelling, insights, and analysis to paint a better picture for investors. Investors are going to have a lot of questions this year, is what we are anticipating. And this is why I love what, Bestate Investment and the group here have put together, because it's equipping you with all of those tools that you're going to need to be successful in 2026. So I'm excited to be here. And without further ado, I'm just going to share my screen and just talk a little bit about what we have. Let me know once you all can see my screen. I think it's still coming up. All right. Can you see my screen? Amazing. Thank you. All right. I see a lot of thumbs up, so I'm going to guess yes. So we recently, about a week or so ago, we recently published our real estate residential report for 2026, where we are looking at a lot of forecasts, a lot of different corridors in Nigeria, estimating what we think is going to happen in the market. What kind of appreciation can investors expect within the market? And I'm going to take you all through some of that. But before I do that, I want to just quickly talk about who we are at NHM. I think Awele did a great job at introducing me, but I just want to quickly highlight the great work that my team have been doing over the past 2 years within the industry. Before we started Nigerian housing market, as I really mentioned, I am a real estate investor myself. I'm someone who loves data. I love data. I love understanding a market before I choose to invest. I love following insight analysis, just basically staying up to date on any market before I choose to invest. And 2 years ago, I started my investment journey in Nigeria, and I was looking for information. I was looking for data. I had a lot of questions, a lot of questions, and there wasn't any platform that was dedicated to real estate. If you're someone who is in technology, as an example, you can probably go to Tech Kaba and go get information about the industry, the technology market. If you're someone who's into finance or economics, you can probably go to Nairametrics and get information about finance and the industry and what's happening with Nigeria's economy. But when it came to real estate, there wasn't any platform that was telling the story. There wasn't any platform that was dedicated to educating the people, both professionals and investors. So for me, instead of complaining about it, I decided to do something about it, right? So, and that was essentially why I founded Nigeria Housing Market. And since then, we've been telling the story of the industry. We've published over 10,000 articles that's currently live on our platform, nigerianhousingmarket.com. We've published over 5 industry reports across the past 2 years. We have over 25,000 followers across our social media platforms. We've hosted 5+ industry events, including 2 physical events in Toronto and in London, and 3 webinar-style events. We have 2 newsletter publications that's generating over 5,000+ newsletter subscribers. And what all of this is validating for us is that people are looking for information, right? And once you're able to establish authority, once you're able to position yourself as someone that can paint the story and can paint the narrative of an industry, people will pay attention, and they have been doing that for NHM. And I'm glad to share some of the work that we've been doing with you all today. So let's get into the report. When we were gathering and putting together our prediction and projection for 2026, we wanted to put together a methodology that's going to work, a methodology that makes sense. So the first thing that our approach acknowledges is the fact that when it comes to data in real estate today in Nigeria, it's still very fragmented, right? It's fragmented, it's inconsistent, and it's still difficult to verify. When you have listing platforms, some of the transactions are incomplete, some of the transactions are duplicated, they are out of date. These are still existing challenges today when it comes to data in real estate, and our methodology acknowledges that is a challenge that exists. That being said, we do also acknowledge that when it comes to economic and demographic data sets, that there's a little bit more consistency right? And there's an established authority that we can kind of trust when it comes to some of this data. So when you look at, CBN, when you look at the official government sites, they are publishing some economic data that can help us paint some picture of what you can potentially expect out of the market in 2026. So at the core of our report and our methodology, we really primarily focused on economic indicators and economic signals to really come up with a lot of our forecasting model that made the basis of our projection. And then on the right side, when you look at our forecasting framework, we're basically scenario based, right? So we're saying if this happens, this is what's going to happen. If this happens, this is what's going to happen, as opposed to saying this is exactly what's going to happen in 2026, because basically that's what a forecast is, right? A forecast is saying that, we're looking at different scenarios and how things could possibly play out in 2026, as opposed to saying this is exactly how it's going to work, because truly, no one really knows. We have three cases model. We have a base model, which is saying that at minimum, this is what we expect to happen. And then we have an upside model that's saying this is what we think is going to be the best case scenario for real estate in Nigeria in 2026. And then we have a downside model, which is basically saying this is what we think at minimum is going to happen in Nigeria's real estate in 2026. And we kind of map that through different segments across the sector. Please, if you do have any questions throughout my presentation, feel free to put it in the chat. I'll always get to questions towards the end of my presentation. So before we even get into the projection, right, I kind of want to start with what is the current market overview in Nigeria, right? What is the current state? What's happening, right? What's happening in the market? And a lot of you might already know this to be the case, but let's talk about it very briefly, right? The fact of the matter is, in Nigeria currently, there still is a big housing deficit, right? There's a big different numbers that's going around. Some people are saying it's 25 million. Some people are saying it's 28 million. Some people are saying 22 million. It's a little bit all over the place, but what you know for sure is above 20 million housing deficits. So we kind of took the middle point, which is 25 million, to say, we believe there's at minimum at least a 25 million units deficit in Nigeria currently. And what that signifies is there's always going to be that need for housing, right? So if you ask me, I genuinely think that real estate is probably the only promising sector and business point that is without a question going to be in demand in 2026, because it's an essential. It is an essential, and the gap that currently exists today, we're not meeting it, right? So there's always going to be that demand, at least as the market stands today. So with all of that kind of being in mind, we think that housing demand in 2026 will continue to be driven by population expansion. The population of Nigeria will continue to grow in 2026. I think Nigeria actually have one of the fastest birth rates in comparison to other countries globally, right? So we're continuing to grow as a country, and I will show a graph in my next slide that's going to talk a little bit about that as well. We think urban migration and employment concentration, especially when you look at Lagos and Abuja as kind of like the prime hub. In Nigeria, we believe that more and more people will continue to migrate to the cities and states. We're starting to see a little bit of trend of developers, again, more specifically in Lagos, starting to target some older properties now, because land is now becoming more and more scarce. So developers are starting to adjust and adapt their strategy and targeting properties that's probably old, outdated, and redeveloping those properties to be more modern and to be more up to date. I think that's another strategies that developers are employing in 2026. And then immigration tightness, we also think is going to contribute to housing demand. Three of the top places that Nigerians tend to migrate to, such as the US, Canada, and the UK. these three countries are getting really, really tight when it comes to their immigration, right? So what that means is we believe that there will be less Nigerians that's going outside of Nigeria in 2026. And for those people that have saved up money in in the intent of wanting to travel outside of Nigeria, I think they're going to be hit with a little bit of a tough reality in 2026. For fortunately or unfortunately, depending on what side you're on, but I think that is going to be the reality in 2026. And for those people, they're going to now start to, instead of looking to travel outside of Nigeria, they're going to start looking for better life in the cities like Lagos and Abuja. It's starting to even more migrate towards the city, which obviously increases demand in those specific areas. So we think demand will continue to go up. And then on the other side, we think that supply will not be able to meet the demand that we're going to see in 2026. We think that there's a few constraints that supply will continue to see in 2026. There will be high construction, or there continue to be high construction and financing costs. I think I was talking to a developer about 2 weeks ago who was looking for loan, and they had mentioned almost like a 60 to 70% interest rate on loan that the bank was offering them, right? So these are some of the discouraging facts or discouraging things that's limiting that supply in Nigeria currently, right? The cost of borrowing money is really, really high for a lot of developers, right? And that just is the reality. We think mortgage penetration will continue to be weak. Nigeria as a whole is doing a lot of, is making a lot of efforts in introducing new schemes like MoFi. FMBN is doing a lot of great work in trying to expand accessibility to mortgage. But for whatever reason, we're seeing that the adoption of all of these different schemes and all of these different programs continues to be weak. Either enough people are not talking about it, either the process is not clear enough, or either there's just resistance due to previous experience. Whatever the case is, we don't see that adoption for all of these different programs. So we think that mortgage penetration continues to be weak in 2026. There's also just that land administration inefficiency, right? So the process of getting land or acquiring land for development in Nigeria can still be better, right? There's a lot of bureaucracy, there's a lot of loopholes, there's a lot of different steps that developers will continue to have to go through in 2026, which makes the process a little bit discouraging for a lot of people. And as a result of that, we think that supply will continue to see that constraint in 2026. And then last but not least, we think that because it's so expensive to borrow money, right? If I have to pay 70 to 80% interest rates every time I'm borrowing money, I think that that's going to limit people from borrowing a large sum of money. And as a result of that, there's going to be limited large-scale affordable housing delivery, right? So we're not in today's environment ready to build affordable housing in scale. Right, I don't think we're there yet in Nigeria. Maybe in a couple of years we might be able to get it, but I think that will continue to be a constraint in 2026. You might see different pockets in different areas where affordable housing might be delivered, but you won't see it in scale, right? You won't see people building affordable housing in scale. We do think that, obviously the Minister of Housing is making efforts in that regards as well, but that will continue to be a constraint in 2026. So just to kind of put a little visual to some of the things that I've spoken about, right? So on the left side here, right, what you have is the current estimate of what we believe is the housing demand, right? So we think that housing demand continues to be around the 25 million range, which was what I mentioned earlier. We think existing stock is around 10 million across the nation, right? We think that existing housing stock that's on the market is around 10 million across the nation, or either already on the market or is being developed in the market. And then we have our estimate of annual housing delivery at around 1 million, right? So when you just kind of look at the adjustment of that graph, you can see it very clearly right? That we're just not closing that gap anytime soon. It's gonna take a lot of public-private partnership, private-private partnership, just a lot of different things to try to close this gap, and it's not gonna happen anytime soon, right? So that demand versus supply gap is something that will continue to keep the market at a pressure point in 2026 and a little bit beyond as well. So I spoke a little bit about population growth and urbanization dynamics, right? So what this graph represents, or what this graph is basically telling you. So when you look at the trend over the past 10 years, right? What you will see is as the population continues to grow, the urban share of the population is also growing, right? So what that means is if Nigeria grew by, let's just say 50 people in 2026, right? Out of that 50 people, right, about 30 or 35% of them, about 30 or 35 people are going to choose to live in Lagos or Abuja, right? So what that means is population is growing, urban density is also growing, right? And that's again applying that pressure in urban areas like Lagos and Abuja. And two things is going to happen as a result of that. One, the smart cities and developers are going to start adjusting to this density that's going to happen or continues to happen. And we're going to have to start building really, really tall high rises to try to accommodate the amount of population that we're going to be seeing in Lagos and in Abuja, right? So you're going to start seeing a lot of high rises and tall, penthouse kind of style houses coming into the market and apartment style properties coming into the market. And we do think that, Lagos urban development team have their work cut out for them because they need to put together the right framework for developers to be able to succeed in this kind of environment. But we anticipate that that's going to happen starting from 2026 and beyond because of just that urbanization dynamic that's going to really concentrate and penetrate the market. That's scenario one. Scenario two is we think that as a result of the density that urban areas and centers and metropolitan areas are going to start experiencing, people are going to start spreading out even further to the outskirts and surrounding areas within the city centers, right? So, if you are an investor or if you have a project as a developer that's in the outskirts of these really dense areas, whether that's in Lagos or in Abuja, you're really setting yourself up to reap a really, really high return on investment in the next 5 to 10 years, because we do believe that people are going to start spreading out a little bit more just to accommodate for the density that we're going to experience, across the board. What you will also see in this trend is, when you look from 2025 all the way down to 2026, at minimum each year, you're seeing at least a 2% increase in urban share of the population, right? So in 2015, urban share of population was 48%, right? And then you move to 2018, it was around 50%, right? So a 2% year-over-year increase. The same thing in 21, and then all the way down to 26. You see that pattern kind of continuing. So, in the next 5 years, in the next 6 years, you can only imagine what that urban share of the population is going to be, right? So we really need to start becoming more and more strategic, one, with our investments, and then, if there's any policymakers or city people on the call today, also with our urban development plan, we need to start putting all of these things into consideration as we think about how we can accommodate this density. So, with all of that being said, this is what we think is going to happen in the market in 2026, right? So as I kind of mentioned in my introduction for our forecasting framework, right, we have three kind of scenarios where we have a low case scenario, which is what we think is going to be the minimum case possible in terms of growth and appreciation for real estate in 2026. And then we have a base, which we think is the more likely scenario that's going to happen. And then we also have an high case scenario that we think, best case scenario, this is what's gonna happen in the market in 2026. So we think that urban districts are going to see a moderate to stable appreciation in 2026. We're anticipating around 5 to 8% appreciation of properties that's in prime urban areas, business districts, and so on and so forth. We think that those areas will grow around 5 to 8%. We think that the sweeter spots are going to be middle income areas. Right, we think that projects in these areas are going to really outperform national average of 5 to 8%. We think those projects will probably see around 8 to 12% in appreciation. So these numbers, when we looked at 2025, we saw around a 3 to 5% growth for prime urban areas. We see around, or we saw rather around 6 to 7% growth for middle income, and then for emerging areas we saw around 8 to 10%. We're adding an extra 2% wiggle room for our projections for this year. Living urban at 5 to 8, middle income at 8 to 12, and then emerging suburban at 10 to 15%. We think that the middle income urban area again is really the sweet spot right now. Being that for the most of you probably already do know this, but there's a big portion of Nigerians in diaspora that are and will continue to invest in real estate in Nigeria. We think they will be a little bit more conservative and strategic in 2026. But even for them, a lot of them are getting priced out of the prime urban district areas today, right? And when you start to do the calculations, a lot of them also come back home for, especially if you're in Lagos, a lot of them start to come back home for 30 December and things of that extent. And by the time you start doing the math of the cost of renting a shortlet, a B&B, an hotel for 2-3 weeks for 30 December, by the time you add up all of those numbers, you can probably get a nice apartment that you will see a nice return of investment in a middle income urban area. Within 5 to 6 years, you can probably either break even or immediately start to see positive yield on your ROI, right? So I think a lot of them are going to start adopting that style in 2026 and beyond. So there will be a lot of investment, we think, being pointed to that middle income of urban areas. Emerging suburban areas, we think, are going to be prime for early adopters and early movers, right? Those people who took the risk on Epe, a couple years ago are probably reaping, not even probably, are reaping that benefit today, right? But for the first couple of years, Epe was boring. It wasn't, right? It wasn't the place to live. And a lot of people weren't moving there until today when infrastructure and all of these things started coming. And then that's when people started moving there, right? So if you are an early adopter, someone wouldn't mind, be strategic and moving and moving in that regard. We think that moving to emerging and suburban infrastructure linked zones could be a great move for you. And then let's talk a little bit about the rental the rental market and the rental pressure that we think is happening in Lagos. So when you look at the headline inflation and you look at the rent index, right? This is kind of, so let me maybe quickly break it down. So headline inflation is saying that this is the inflation currently in Nigeria, right? So in 2025, if inflation was reported to have grown around 185% in comparison to 2024. However, you're seeing in some cases rent increases on average of around anywhere from 100 to 300% in rent increases in some areas in Nigeria in 2025. So what we did was we compared inflation growth, right, by rent increases that we experienced in Nigeria in 2025. And we did this through a survey, right? So we posted a survey to our newsletter subscribers. We asked on social media as well, and we generated at least 150 responses. And we kind of broke this down by different areas and different cities, and we saw that rent is increasing at a much faster rate in comparison to the inflation that we're experiencing in Nigeria, right? So inflation might not even be the right basis of comparison for rent anymore, but that's the only base that we have today. Because the reality is, there is that rent inflation, but then there's also the human inflation. At least that's what we call it at NHM. We call it the landlord inflation, meaning, there's an element of, I'm going to categorize it the way that I think is accurate, but there's an element of greed. Uh-oh, I lost my connection, trying to reconnect.
What if the tomorrow you've always imagined was within your reach today? The one with a home of your own, a secure future for your family, and true financial freedom. That future begins right here in Monia, Ibadan, Nigeria's next big city. An area transformed by the new Monia Iseyin Expressway and the Monia train station, which provides direct access to Lagos, making it a prime location for property appreciation. And with the upcoming Ibadan dry port and major institutions such as the University of Ibadan and IITA in close proximity, this is where growth meets opportunity. At Morrow Residential by Blueprint Developments, we have created a path for you to own a piece of this future through affordable land in a secure estate. With a reliable title and flexible payment plans, your investment today becomes tomorrow's security. Begin your journey with an initial deposit of 500,000 naira for a 500 square meter plot, or 300,000 naira for a 300 square meter plot, and spread your balance for up to 6 months. Morrow Residential. Own land, own freedom, own tomorrow.
Can you still see my screen?
We can still see your screen.
Yes, we can see your screen.
Okay, amazing. Sorry about that. Yeah, my connection disconnected very briefly. But yeah, like I was saying, right? I think there's an element also that we can't. There's an element in rent. We call it rent inflation by landlord greed that we cannot necessarily quantify. Yes, that's the word, right? We can't quantify it by visible numbers or by visible data. And oftentimes landlords are not gonna come and say that, yes, so I'm greedy, I'm increasing my rent from 100,000 to 500,000 because of greed. No one is gonna admit that. But when you paint the story using inflation in comparison to the way people are raising rent across the nation, it's not comparable. Those numbers are not comparable. And unfortunately, depending on what side of the spectrum you're kind of on, whether you're an investor or a renter, we don't think that's going to change in 2026. We do think rent is going to continue to go up. Obviously, if you are an investor, that is a fair, great news, because you're going to see your rental yield, right? So, for realtors and professionals on the call today, that's the kind of story that you're going to see, and that's the kind of story that you can paint for your investors, right? Literally, if you show them this graph, it paints that picture, right? Inflation is rising, rent is continuing to almost double, and in some cases triple inflation. So you might have heard people say, is real estate a good edge against inflation? The clear answer to this is yes, right? Especially if you're playing the long game and you're using real estate as a weight for rental asset and rental yield. The clear answer is yes. You can always, in this case, especially in Nigeria, use real estate as an edge against inflation, and that will continue to be the case. That will continue to be the case in 2026 as well. So Lagos residential outlook. We think that Lagos continues to be the most dynamic and constrained residential market in Nigeria. The demand continues and will continue to be extreme in 2026. We think that again, some of these things I kind of mentioned a little bit earlier. It will be driven by population density, economic concentration, and then just that limited land availability, which is again why some developers are now looking for older properties, kind of breaking it down, turning into car parks, and then just redeveloping them back because of just how limited land is today in real estate, right? So the market is highly classified or characterized by that under housing and that under supply pressure that we're currently to see. That strong diaspora participation, right? So real estate is the prime spot and hub for Nigerians from diaspora, and will continue to be in the foreseeable future. We think that again the cost of acquiring a land is high, and then there's just a lot of infrastructure driven expansion happening in Lagos. As you all probably know, the GDP of Lagos alone in comparison to anywhere else in Nigeria is almost double when you compare it to any city across the board in Nigeria. And the allocation of budget, even by the federal government to Lagos, is a reflection of that, right? Lagos has the highest budget in comparison to anyone else across the country, and there's a lot of intentional investment, I would say, that's driving infrastructure expansion across Lagos, right? So one of the things that's getting a lot of positive feedback and review is that Coastal Road, especially from Nigerians that came for that to December from diaspora. There's a lot of positive reviews about the Lagos Calabar Coastal Road currently, and we think there's going to be more and more of that to come in 2026. We think that the growth corridors will be continue to be kind of like that Lekki to Ekpe axis. We'll continue to see a lot of growth in 2026. We think the mainland will see a lot of growth as well in 2026. There's a lot of interconnectivity now in the mainland, and again with the Lagos Calabar coastal highway as well, it's becoming easier and easier also to try to access mainland and the island as well, and really just bridging that connectivity. We think that the rail system is seeing a lot of traction, and if we continue to get the red line and the blue line, we continue to get that really, really right. Those locations that's around this prime transportation corridors will continue to see a lot of positive return in 2026. And then emerging areas like the waterfront and peri-urban zones across Lagos as well will continue to grow. Will continue to grow in 2026. So all of this to say that Lagos will continue to be a prime location for real estate investment in 2026. Investors do have to be strategic in terms of picking their location. You have to be clear on what kind of ROI you're looking to gain from the market, right? So whether you're looking after property appreciation, are you looking for positive rental yield, right? But we do think all in all, the people that's going to benefit the most from real estate in Lagos, or probably even more general, are people that can be patient, right? You have to be patient to yield that significant ROI from one in real estate generally, but specifically in Lagos, and we'll talk a little bit about Abuja as well. But you have to play a little bit of a 5 to 6, 10 years kind of game to see a really, really significant ROI in your investment. All right. So similarly, let's talk about Abuja. We think that Abuja is a little bit more structured, and actually, the weight game that I said earlier about Lagos is almost double in Abuja. You have to be extremely patient with Abuja. The market is a little bit more structured, is a little bit less volatile. When it comes to the residential market, I think that the biggest kind of quote unquote controversy that kind of comes out of Abuja is with a lot of you might know Wike and the FCT minister and some of the policies and what do you call it, restrictions that is put into place. But that is probably the most kind of, negative quote unquote press that comes out of Abuja's real estate market. Aside from that, it is a lot more structured. It's a lot less volatile when it comes to the market. It's a little bit more diplomatic in comparison to Lagos, and we see a lot more institutional demand across the Abuja market. We think for investors that's investing in Abuja, again, you have to play that long term kind of game. To really see a positive ROI. We think that actually land banking might be one of the smartest strategies in Abuja as well, because again, as things kind of play out in the highly dense urban cities like Lagos, right? And for those people that's not looking to move to the outskirts of Lagos and surrounding areas in Lagos, they might be looking for, I don't want to call it the second best option, but they might be looking for let's call it alternative option as opposed to second best option. They might be looking for that alternative option, and for a lot of people, Abuja might come to mind, and that makes it a really, really prime location for like land banking, because then you can reap the benefits, a couple years from now. But we do think that there will be a lot more structure and a lot more urban planning across Abuja as a whole in 2026. So all of these things kind of being kept in mind, we in today's world believe that infrastructure is the number one primary value driver of real estate in Nigeria. We think that we believe that it is the single most important determinant of residential value creation in Nigeria. And the graph that you have on the right here kind of paints a little bit of a price index story, or a little bit of a price index narration in terms of what to expect. Often, in most cases, what to expect in terms of appreciation. When it comes to infrastructure across Nigeria, right? So over here you have a pre-infrastructure baseline, right? So what this is saying is that the cheapest you will ever be able to get a property is before anyone knows that there's going to be an infrastructure project coming to that area, right? That's the cheapest you ever get it. And that's kind of like the baseline, right? So this is, if you're someone who was super tapped into NHM, super tapped into the government, super tapped into policies, and you can kind of see forecasting, and you can project what's to come, you can really secure properties and prime investments before the public becomes aware of the projects that's coming to these areas, right? So the developers that's really, really tapped in are able to benefit from this, secure these investments at the minimum or the most minimum case scenario, because the moment construction begins, or the moment the public becomes aware that infrastructure is coming to an area, we can all now start using this infrastructure as part of our marketing materials and promotional materials and so on and so forth. At minimum, I want to kind of emphasize on minimum, right? Because our price index is very conservative. We're saying that at minimum, we think that these properties will appreciate by at least 25%, right? So the moment construction begins, the moment people are aware that infrastructure is coming to the specific area, specific corridors, you will at minimum see a 25% increase in the value of your property. Now, the magnitude of what infrastructure is coming to that area also plays a role in terms of the kind of appreciation that you will see. But at minimum, again, in comparison to when you first bought that property, you can see a 25% appreciation. And then if you didn't key in when no one knew that infrastructure was coming, the next best phase to key in is when construction is going on, right? Or when the infrastructure has been announced, construction is going on. That's the second best phase to key in into property investments in Nigeria, right? So that they can gain on the next appreciation, which is post completion, right? So the moment that infrastructure project complete, most properties, again, at minimum, we'll say 65% appreciation from the base index, which is the pre-infrastructure index, right? So if you bought from the pre-infrastructure index, you'll see at minimum is 65% appreciation. If you bought during construction, you will see at minimum a 40% appreciation on your property. That's been the baseline. Again, a lot of these things are case-by-case basis, but when we analyzed kind of the market trend over the past five years across private locations, this is kind of what we saw in terms of appreciation, and as a result, making infrastructure as that number one primary value driver of real estate. So I spoke a little bit about kind of like the different scenarios or the different baselines for 2026 and kind of like what you can expect in 2026. So at base, right, which is a gradual macro stability with continued urban demand is what we anticipate, right? So your base is over here with that 8 to 12% appreciation. That's kind of like the middle point, right? So we believe that if everything goes according to plan with no surprises, whether that's political surprises or economic surprises, like last year was a big surprise with the rebasing and kind of how GDP is calculated, and that really threw off our forecast in 2026, and that's why we kind of adjusted to this new format now that's based on scenarios, right? Where we're saying if there is no surprises at all and everything is the way that we anticipate that's going to be, we anticipate about 8 to 12% appreciation across the board for properties in Nigeria. We think on the upside, if there are drastic changes in especially the economic environment in Nigeria, we could see upwards of 14 to 18% conservative appreciation across properties. And then on the downside, if we have political disruption, security concerns, diaspora remittance becomes really less, and so on and so forth. We think that on the downside, we could see about a 3 to 5%, but most likely, what our projection is based on is the base of 8 to 12%. We think that's the most likely scenario for 2026. So we think that for your investment strategy and for investment framework for 2026, we think that again it varies by risk, it varies by return profile. As an investor, you need to understand what it is that you're looking for, right? Are you looking for that quick high return opportunities? That's something that's already linked to an infrastructure that's already going on, knowing that you're probably going to pay a little bit higher on the entry point, but depending and banking on the completion of this infrastructure suburbans to be able to yield your return, which, if you look at the previous slides, we anticipate could be upwards of 40 or 65% appreciation. Or are you looking for just something a little bit more stable, where you can invest in established urban rentals? Again, rental is continue to outpace inflation, right, across Nigeria. So if you're looking for something a little bit just more stable, you just want your monthly return or your yearly return on rent, then again, you're looking at areas where rent is performing really, really well in established urban areas. And then you're also looking at specific apartment style and type as well. Two bedrooms are doing really, really well, especially in Lekki. For Nigerians in diaspora, and then in some areas like Yaba, as an example, because of its interconnectivity to a lot of these different areas in Lagos, it's also yielding a really positive ROI on rent, right? So just to put some examples on what a stable yield opportunity could look like, and then for long term optionality as well. We continue to think land banking is it's the oldest strategy in the book, but it's probably the most guaranteed strategy in the book, right? It's the least kind of risk adverse strategy. It's proven, it's tested. you're gonna need land. You're gonna need land, right? That's a thing that everyone is always going to need. And as long as you have the right documentations, you have the right properties, the right documentation, the right paperwork, and you're in the right access, we believe that, from a long-term optionality and strategy framework, that land banking and mixed-use residential projects continue to be the best strategy for investment framework in 2026. So, long story short, long story less long. I hope this has been useful and meaningful, and we'll probably dive into a little bit of questions in just a second. I'm not sure whether you want to kind of moderate that, but overall, I think, or we think that the real estate market in 2026 will be defined by selective growth, right? We think that you have to be thoughtful, you have to be strategic, you have to always think about infrastructure, you have to be aligned with infrastructure. We think affordability tension is going to drive the market. A lot of people will continue to look for affordable option. And like I mentioned, even Nigerians in diaspora are starting to be priced out of this really, really prime urban area. So if you're developing in mid to low income areas, you're going to see really, really positive yield on your investment. We think that structural demand will remain intact. And then, for investors, developers, policymakers, even realtors to succeed in 2026, you have to be disciplined. You have to be extremely disciplined. You have to understand your market. You have to be able to articulate to your investors why their investment is prime and why their investment is going to yield positive ROI. We think that realtors and professionals that will be able to differentiate themselves in 2026 are the storytellers, are the people that can put the data together from credible sources like NHM, not to toot our own horn, but really just pull data from sources that's not yourself, right? Because if I'm an investor and you're saying, and your sources, trust me, bro, if you and your trust don't get out of here, right? You have to pull it from a place. You have to pull it from a place that is credible, that doesn't have any horse in the game, right? For us, we don't have any horse in the game. We're not selling properties. We're not after your investment. We're really just after education and informing you, right? And that's what we are seeing as credible, because we're not trying to sell. We're not trying to get anything from you. We just want to inform you, right? So those are the kind of sources and places that you want to put your information from when you're educating and when you're talking to your investors. So if you want to stay in the loop, feel free to download the report. You can scan the QR code on your screen to download the report. We also do have a daily digest, which is a daily newsletter that goes out to everyone, both professionals and investors, and just everyone within the ecosystem that wants to stay in the loop, right? So we're sharing news, opinions, thoughts, economic signals. We're giving you all of the headlines that you need to stay ahead, including policy changes that you need to watch to stay ahead. And that's really the number one source that a lot of people are getting their quick daily blog on real estate on a daily basis. And then obviously, if you want to just do a drill in and dive into the report as well, you can use the second QR code to download the report directly. Awesome. Thank you. Cool. Yeah, I think I kind of mentioned